Thank you for joining us for today's online seminar, Understanding TradeStation's Future Symbols. There are a number of symbol sets in the futures database at TradeStation that may help you work with future symbols, a few symbol sets that you may not be aware of, and a few ways in which we construct the symbols that you may not be aware of that could make it a little easier for you to work with different markets, to designate pit, to work with continuous contracts. Those are the things we want to go over in this presentation. First, the basic construction of a future symbol in TradeStation. The root symbol, I used SP for this example, followed by the month, followed by the two-digit year. This is the construction. Of course, we don't actually put in the plus signs. We just type SPM07, June S&P Futures. This would be the electronic. Our future symbols always look for the electronic market unless you designate otherwise. That otherwise I'll show you in just a moment. But with no designation otherwise, we just go right to an electronic contract. And by the way, I put a footnote at the bottom of the slides. If you want more on this information or a recap of it, take a look in the user guide. There's a page titled Future Symbols you might find helpful. So there's our root symbol, SPM07, as an example. Now we also have what we call extensions to those symbols. As I mentioned earlier, with no other designation, the symbol is taken by default to be electronic. One of the extensions is .P. .P designates specifically pit. So if there is a symbol that trades both electronically and in the pit, and I'm talking about the exact same symbol, no extension, it would be the electronic contract, .P, pit. Now we also construct a few additional symbol sets or data sets on our end in the database. For instance, .C stands for composite. We use that in a number of markets that trade in the pit during the day and then electronically overnight. In order to create a single chart that reflects that 24-hour or almost 24-hour market, we create a .C symbol that shows it as if it was a single continuous trading. .C is a composite, pit, and electronic where applicable. The .D symbol is daytime only. The not daily bar only, but just the daytime hours only. The .D symbol is used in markets where there is an electronic market that trades side by side with the pit. And in many of those cases, the electronic market trades 23 or 23 and a half hours, virtual 24-hour market. But the pit is only open what we would consider the U.S. business hours, U.S. daytime. So the .D symbol takes those parallel hours and only displays those parallel hours for the electronic symbol. For instance, if we look at the E-mini S&P, the ES symbol, and we use the .D, it'll only display 8:30 to 3:15 Central, the same hours the pit is open. Without the .D, the ES symbol is that full day and night session. So here's what some of those symbols look like. If we had SPM 07, the same symbol we were looking at earlier, and added a .P, now we're designating pit only. Those daytime hours in Chicago. And if we make this .C, now it creates one symbol that displays the daytime pit and the overnight Globex market. Remember, we use the .C in order to weave a virtual 24-hour market out of the same symbol that trades a pit session, day, and an electronic session during the non-daytime hours. The .C weaves that together so I can see a full round-the-clock chart for that particular symbol. Here's an example of a .D put up in the mini Dow futures. YM is the root, M07. This market trades, I think it's 23.25 hours, but it's the full virtual 24-hour symbol. If we put the .D on the end, it shows us the daytime session only. So that's the June mini Dow futures daytime only. Now I just want to reiterate, that doesn't mean daily bars only. That means that this symbol is deemed to have a session that is only during the day. It disregards the nighttime hours. Now in the case of the mini Dow futures, or in the case of all these futures with the .Ds, the .D is meant to be a parallel trading session, parallel trading hours to whatever the pit is. So in this case, it's actually 7:20 to 3:15 Central Time. So it's parallel to the pit hours for the Dow futures. Finally, before we look at the platform, let's discuss the concept of continuous contracts. Our futures database also has continuous contracts. Many of you are probably familiar with the idea. If you're not familiar at all with the idea of continuous futures contracts, the concept, of course, is that futures contracts have a very short life. Even a futures contract that's on the board for perhaps 9 months or a year or even a year and a half or longer in some markets doesn't necessarily have any useful trading activity until those last few months of its existence. So in order to create longer-term histories, it's common amongst futures traders and technical analysts to create what are called continuous contracts. To take contract and when one contract goes off the board or its expiration or delivery is imminent, begin to track the next futures contract, so that we're always appending the newest contract when the old one goes off the board or delivery is imminent. And that way it creates a longer-term database. Futures traders always recognize that there could be some anomalous bumps in the prices. In fact, we'll talk about that a little bit. Anomalous bumps in the prices when we move from one contract to the next. That's a downside. The upside is we can look at a long history without having to go through each individual contract to do our back testing or to scroll through charts and look at indicators. In our database, the continuous contracts all begin with the @ symbol. They all begin with the @ symbol. So @SP is the continuous S&P futures. No other extension is necessary. No month designation is necessary because the @ sign continuous will pull that data file and will be using whatever historical contract and whatever current contract are in that continuous. Now the @ symbols can also be used with our roots and the extensions. So for instance, @YM.D is a continuous mini Dow daytime session only. A continuous mini Dow daytime session only. So that I can use the same continuous contract idea. I don't have to worry about the quarterly rollovers. I can look at a longer history, daily bars or intraday bars, but only confine myself to the daytime hours. We discussed that .D pretty extensively already. So we can use the @ symbol with the symbol, the @ sign with the symbols and .Ds. Now, something else that has been added into TradeStation is the @ sign can be used with a root and a specific month and year, and we call these automatable continuous futures. In other words, by using the @ sign, it's a continuous. By using the @ sign with not just a root, but with a root and the month-year extension, the root and the month-year designation, then I'm specifically saying I want a continuous contract, but I'm going to use this for trading, for automated trading, so I want this to trade into that specific month and year. One of the advantages of using an automatable continuous, I guess those are the two advantages, automatable and continuous. The continuous aspect means that even at rollover, I've got historical data because I'm working with a continuous. One of the issues at rollover, and if you want to think in terms of the quarterly financials like mini Dows or S&Ps. Rollover time every quarter. As soon as that contract becomes the active trading contract, there's action, but just a day or two before, there was very little action, very little to chart, very hard to do analysis and calculate indicators, strategies. So using a continuous means that even at rollover, I've got some history, I've got plenty of history to carry in for my calculations. The automatable part means that I can control and designate that I am automating into that particular month. So we call those automatable continuous futures. In a little while, we'll take a look at some customizable continuous futures contracts as well. Now, we spent some time on this groundwork so that you could have some notes and see the idea that we're trying to get across. And I'm going to move back to the platform now. We'll talk about the custom continuous in a few minutes, but I'm going to move back to the platform so we can see exactly some of these symbols in action. I put together a radar screen page and some charts so that we could see the symbols in action, and you can get a sort of a graphic sense of what the trading hours are and how those extensions compare to each other. So for instance, taking a look at this radar screen page, you'll see I have SPM07.P, that's the PIT futures. We also have SPM07, SPM07.C. That's the composite. So the PIT is PIT hours. SPM07 is electronic only. .C is a composite. Now I created an indicator in easy language which doesn't do any technical analysis, but I just wanted to see the hours displayed here in radar screen just so we could get a handle on what these symbols mean and how they work. So here's the PIT futures, 9:30 to 4:15. This is all displayed in Eastern on this laptop. 4:30 to 9:15, 4:30 p.m. to 9:15 a.m. is the electronic. And then the composite is the composite of both of those sessions. You'll see 4:30 to 9:15, 4:30 p.m. to 9:15 a.m., then 9:30 a.m. to 4:15 p.m. So we get to divide the day up differently. We can see the PIT, we can see the electronic, we can see a composite, and create charts both intraday and daily out of that composite to see the market in its full round-the-clock scope. And we can use the same extensions with the @ symbols. At SP.P, that's our PIT continuous contract. At SP, the electronic, and at SP.C, the composite. And if you look on my timing columns, my hours columns, you'll see that they match up. Let's take a look at a chart for a moment. Here you'll see those three symbols. Now I made intraday charts so we could see the breaks in the sessions. Let me scroll back just a little bit. Okay, excellent. Here you'll see .P is the PIT only, and the trading hours are daytime. It's a 15-minute. The trading is confined to this part of the day. Here's the electronic, SPM07, no extension. So this would be up until the early morning, the PIT, and then the resumption of electronic trading late afternoon. And .C, which is the composite contract, you'll see all of those combined into one data set. Just to make the same point, not to belabor it, here we've done the same thing with the continuous contract at SP.P. So here's our daytime using the continuous, PIT only. At SP, which is the electronic, so here's the overnight into the early morning, no trading during the day, and then the evening resumption. And at SP.C, which brings both of those other symbols together into a continuous day within the continuous contract. Let's take a look at a few others. Let's take a look at the E-mini S&P. Now you'll see we only have two symbols in this case. We have ESM07, that's electronic, of course. It is electronic because we all know it's electronic. But there is no extension on it. There's no extension on that ESM07, so it's always going to be an electronic in our symbol set as well. And the ESM07, the trading hours are 4:30 p.m. to 4:15 p.m. So it's 23 3/4 hours. And ESM07.D, the .D symbol, of course electronic because the E-mini S&P is always electronic. And that's 9:30 a.m. to 4:15. Again, this computer you're looking at is on Eastern time, not on Central. So it's referring to Eastern time. 9:30 a.m. to 4:15. So the .D symbol just gives us the E-mini S&P data during the pit trading day, during the U.S. business day, the futures business day. Same things can be done with the continuous contract, add ES.D. Now in the E-mini S&P, there's no .P symbol because there is no pit. There's no .C symbol because there's no composite to construct, weaving together pit and electronic. So there are only two possibilities for the E-mini S&P. Take a look at the mini Dow for a moment. Same idea, but there's something else I want to point out about the mini Dow. YMM07, electronic mini Dow futures, 7:15 p.m. to 5 p.m. the next day. I may have misstated the exact hours before when we were looking at the slides, but you can certainly check. YMM07.D, the June mini Dow futures, daytime only, 8:20 a.m. to 4:15 p.m. And that's what I wanted to mention in particular, this .D, which is 8:20 a.m. to 4:15 p.m. The .D symbol is constructed to show the daytime hours only. The definition of daytime hours for this purpose is when the pit is open. So although the standard session for trading U.S. equities is 9:30 to 4:15, and that's the hours that are used for the ES.D, 8:20 to 4:15 is used for the YM.D because it matches up with the pit. For those of you who are familiar with creating custom sessions in TradeStation, you can create a custom session for any of these symbols as well if you want to do some custom work with what the opening and closing hours are. But of course, I want you to understand what's in the database and what's available to you without customizing any of those session hours. Finally, at YM.D, the same idea. There's no .P for the mini Dows, no .P for the E-mini S&Ps because there is no pit. There's no .C because there's no composite kind of contract to work with. We can take a quick look at the mini Dow futures. Same idea. Here we have YMM07. So here are the June 07 mini Dows. And you'll see it's a full night and day contract. And then the YMM07.D that just yanks out the part of the session that occurs in those hours deemed to be daytime, in this case 7:20 to 3:15 Central. Continuous contracts the same. I'll supply you with all these workspaces if you'd like to see them, and I'll mention that afterwards that we'll make all that available. Let me return to this radar screen page once again. And I did want to point up something else. I did throw in one of the ag contracts. Ags are fairly new on the electronic system during the day. They were available at night only. So what I did is I put in July corn. Now CN07, there's no extension, so that's an electronic contract. And you can see what the trading hours are deemed to be. It's a two-session trading day, 7:30 p.m. to 7 a.m. And then there's another session, part of the same day, but an additional session, 10:30 a.m. to 2:15 p.m. Again, this is Eastern time, but that's the traditional pit hours. Now here's CN07.P, and that is the PID only, 1030 to 215. CN07.C, that's a composite. That's 730 to 7 and 1030 to 215. Let me mention something about the corn.C. The corn.C was, of course, very useful when we did not have this session for the electronic. We did not have a daytime electronic. In that case, the corn.C symbol served the way the .C's did up above when we talked about S&P, to take the day session, night session, and connect them into a single trading day. So in some ways, this .C symbol is now a moot point, since we do have the electronic. It still exists in our database. You're welcome to use it, but again, this change occurred last year as we began to have the daytime electronic trading of the grains. Same rules for the continuous at C, at C.P, at C.C. Corn electronic, corn pit, corn composite. Taking a quick look back, you can see how the .C really looks the same now as the electronic contract, because the electronic now spans both that traditional daytime only. Here's the .P symbol. Now this is not the pit. This is the pit hours, but it's the trades done on the electronic system during those pit hours. A little bit more information on some of those continuous contracts. Let's take a look at this workspace about the automatable continuous contracts. Let me just resize these windows, see them a little bit better. Here's at YM, so that's continuous contract, mini Dow futures. It's an intraday, it's a 15-minute. At YM.D, it's daytime only, so you see some of the day beginning to construct. And I did want to point out this symbol set at YMM07. We referred to it earlier under the continuous contracts. We said that now there are automatable continuous contracts. So as long as we are in the June futures, this at YMM07 looks the same as the at YM. The advantage is that this can be automated. So if you apply a strategy and you do want to automate, it can be automated, and it tells you what you're automating into, if you will. You're automating into those June futures. In 8.2, you can create custom continuous futures contracts. The customizable aspects of this are which contract months to include or exclude, the rollover rules to be used based on the calendar, based on open interest, based on volume, the adjustment rules that you can use. We said that for futures traders, one of the issues with continuous contracts is is the price differential when we roll from one contract to another. How to handle that differential will be something you can customize. Finally, you'll be able to designate whether the contract can be used for automation or not. Now, be advised that these symbols are built via the symbol lookup, and we're going to see that dialog box in just a moment. In the user guide, you'll find information on this under symbol lookup custom futures. Let's return to the platform and take a look at a couple of things. Here's a multi-data chart. At CL.P is data 1, so it's continuous contract pit. At CL.P, with these sort of arcane letters and numbers here, is a custom continuous futures. It's built off the same core database at CL.P, but then it has some custom settings in it. So let's take a look at how that's constructed. Here's the symbol as it was constructed. But as I said, the details for the symbol and how it's actually constructed are in the symbol lookup. So let's click there and take a look at that dialog box. In the symbol lookup, there are a number of tabs. I'm sure most of you have seen this already. You've looked up a variety of symbols. But a relatively new tab is the one labeled Custom Futures. First, you're requested to put in a symbol root, and you can use the lookup again to find the root if you're not sure what it is. In this case, I've chosen CL.P. The months to include are checkboxes here. By default, all the trading months will come up checked, and you can remove any you don't want. Then there's base the continuous data series on. So do I always want to be rolling into the nearest contract or a more distant contract? I'll show you an example of when we might want to experiment with something other than nearest contract. And then the rollover trigger could be based on activity settings related to open interest, volume, or some combination, or based on time, a number of days prior to expiration, delivery notice day. Finally, the back adjustment method. The adjustment rules I referred to before, an unadjusted contract, absolute difference, or ratio. With an unadjusted contract, there won't be any adjustment for those differentials that roll over time. Absolute difference is arithmetic, and ratio is exactly that. Then there's a checkbox if you want to use this symbol for trading. Now let me move this dialog. This may not fit perfectly in the player, but let me move this a little bit so you can see it better. Right. I just want to point out this. Use this symbol for trading. Notice the symbol is constructed. This is actually a code for the settings you may have chosen. If I check use this symbol for trading, notice it also inserts the current active trading symbol. So now it still builds the symbol set with these code letters and numbers for your settings, but it includes the M07 part, so it's easily identifiable what it's exercising into. I remove that. It just doesn't include the M07 in that symbol. Let me close this dialog and we'll return to the chart. Now, as I said, when we looked at the dialog box, we saw that I had the setting for the adjustment to unadjusted. I'm going to scroll back a bit. This is crude oil. It's a daily chart. These two different continuous contracts. And there's a point that I want to make just to hopefully give this some perspective. And I'm going back to last summer when we certainly made some pretty high prices in crude oil. And this is not an analytical statement, but just to highlight the difference. The top data set is our database's version of the continuous contract, which includes back adjustment. And this one does not include back adjustment. And again, going back to July of last year, you can see we have a high, for instance, July 14th of 06. My continuous contract that comes right off the database shows a high of $90.96. I don't know that that was the exact high of all those days, but I'm just picking a high bar back last summer. $90.96. But in thinking back, most of us would recognize oil never actually traded to about 91 bucks. And if we look down at this unadjusted contract, on that same day, we have a high of $77.95. That's because there's no adjustment. The adjustment factors, the back adjustment factors, will have an impact when we scroll back beyond the current contract. And I'm just kind of highlighting this idea of what the back adjustment rules are, what their implications might be. And in creating a quote-unquote raw price history to look at what the absolute levels reached might have been, an unadjusted contract may actually give us a better picture on what the absolute highs and lows may have been. Oil reached into the 70s, well into the 70s, but it didn't actually reach 90, and it appears to have reached 90 on a relative basis because of the back adjustments. Now, the custom continuous are fairly new. I began to experiment with a few things with them, and I'll give you a look at something I was curious about. And I invite those of you futures traders and spread traders to take a closer look at this and maybe carry it further. What I did is I created one continuous contract futures. It's soybeans in the pit, and it's May. In fact, let's take a quick look at that dialog box. So when I created this custom continuous, I said this will only be May futures. I'm ignoring all the other contract months for the soybeans. Let me back out of these again. So this is only May, and you don't need to see the dialog box again. This one is only November. What I was trying to experiment with is, can I isolate a longer-term history on, let's say, an old crop, new crop spread, a May-November kind of spread. So this is May only, and this is November only. Then I figured, well, if I'm going to look at that spread, I really want to look at that spread from January through April. That's probably the time when that spread may be of the most interest. And again, this was just an experiment. I invite you to look at this and give it some considerations, especially if you're looking for seasonals. So I wrote a very simple paint bar that would just highlight the bars from May through April. That's what the cyan bars are, just so I could see, well, what's that period of interest for a May-November spread? Might be, let's say, January through April. And I highlighted those same bars here, January through April, on the November continuous. So here's the point of interest. Now then I created a spread indicator. I did it a little bit differently than the default spread indicator, and calculating the differential, and again highlighting the color from May through April. So I'm sorry, from January through April. So it's the May-November spread from January through April. Now by doing this on a daily and loading in a lot of data, I could see this was the early part of 07, 06, 05, and I can go back and examine that seasonal during that period, because I've been able to isolate just the Mays, just the Novembers, and then calculate the spread difference and include the coloring. And by the way, the significant difference in this spread indicator was inputs for the months that I want to highlight, in other words, January through April, and the coloring. Otherwise, it's the same spread indicator, data 1 minus data 2. One last practical note on those custom continuous contracts. These are not saved anywhere in the database. When you construct these, we saw that these are constructed via that symbol lookup dialog box. When you construct them, those symbols don't stay in the database. If you save the chart, the workspace, of course the symbols are saved with the chart in the workspace. You could also put that symbol into radar screen. So what I'm suggesting is, if you have a particular symbol, custom continuous symbol that you've built, you may want to save it someplace, either by saving the chart, or even make a radar screen or a quotes page and just throw that number in, throw that symbol in, so that it's always there, even if you don't put any analytics on that radar screen or quotes page, just so you'll be able to reference that symbol. Now, if you use these a lot, you may actually come to know these letters and number codes. And you could actually type the symbol directly in there. So even if you just kept it on a little notepad, you could type it directly into the command line, and it would be recognized as a constructed symbol. But it doesn't, the symbol that is a construct and is not saved anywhere in the database per se. Now there's one more item we want to talk about, and these are some indexes that may be useful for futures traders. It's a little bit of a crossover topic. Let me go back to the slides for a moment and introduce this idea. There are 6 symbols in the database that are actually listed under indexes that futures traders may find helpful. And what they are is the futures premium versus cash, the relationship of the futures contract to the cash index for 6 different index futures contracts. Now here's the symbols, and here's what they are. For the E-mini NASDAQ, Russell, and S&P, the full-size NASDAQ, full-size Russell, full-size S&P. It's the relationship of the futures to cash, the futures premium versus cash. These 6 symbols are in our database. You can find them in there, and it may save you doing some computations in TradeStation. Take a look at this workspace for a moment. Here's a radar screen page. I just threw in these 6 symbols that we saw on the slide, just so you see what they are. And as far as the trading hours for these are concerned, the trading hours are deemed the regular trading hours, 9:30 to 4:15 Eastern. And let's take a look at this chart. Here you'll see our symbols. The E-mini Russell 2000 June 07 day only. I'd put up the day only symbol, .D. Dollar IUX, the Russell 2000 index. And then this symbol, which is the dollar ER2 IUX. That's one of the symbols you just saw on the PowerPoint slide. And that's the differential between the two. That's the difference between the futures and the index. Now that is the same, this is tantamount to putting up the spread differential. It's just the arithmetic difference between the futures and the cash. So if you use the spread difference between data 1 and data 2, between the futures and the cash, it's the same calculation. The advantage of using the index, the advantage of using our symbol, which is listed under indexes, for that premium, for that relative value difference, is that it comes out as a data set, so it doesn't have to be treated as an indicator in your platform. It comes out as data, which means it can be used pretty easily in strategies. And because it comes out of our data set, it doesn't just have a close value, it has an open high-low close. So it creates more of a body of data to work with in analyzing one against the other. This was the E-mini Russell 2000. Here's the same concept for the S&P. Here's the June S&P pit. Dollar INX is the S&P. Dollar Sphinx is the S&P premium over cash. And this differential is just the spread indicator. It's going to make the same calculation as Dollar Sphinx, but Dollar Sphinx is treated as a data set, as part of our data feed. Comes over the data network, you have an open, high, low, close, and it's treated as a data set in your analysis. So actually this is data 1, this is data 2, this is data 3, this is an indicator. Remember that those symbols are listed in the symbol lookup under indexes. They're not listed under futures. They come over the index. They're listed in the index part of our database. Well, I want to thank you for tuning in. What I'll make available with the archive of this online seminar are the workspaces that you saw here, a few pieces of custom easy language for those sessions and for those spreads. I'll make the easy language available for these spreads, for these paint bars that we were looking at, and also for these trading hours. I don't know if anybody's interested, but I will make them available. And I'll also make available a copy of the slides. We'll make it a PDF. We'll post all that with the archive of this online seminar. Thanks again for watching.